Have you ever looked at a stock chart and just your eyes glaze over? It looks like a foreign language, right? Well, today we're going to flip that script. We're going to turn all that confusion into pure confidence. We are building a powerful, totally free stock chart from the ground up, step by step, so you can start making smarter, more strategic decisions. Let's do this. And that is exactly the mindset we're going for. The goal here is simple, to look at one of these charts and not see all that chaos, but to see clear, actionable opportunities. That's the million-dollar question, isn't it? It is so easy to feel like you're just guessing, just throwing darts at a board. But what if I told you that a simple, foundational chart setup could give you a massive edge? That is exactly what we are building right now. Okay, let's start with the most important shift of all, and that's your mindset. Without a plan, clicking buy or sell is pretty much just pulling the lever on a slot machine. We're here to change that, for good. Here's the deal. A well-configured chart isn't just a picture of what already happened. It's your roadmap for what could happen next. It helps you replace those emotional, gut-feeling guesses with truly informed decisions. This setup right here is your first real step toward trading with an actual strategy. So let's get into the practical stuff. You know, the best tools are the ones you can actually get your hands on, and this entire setup is completely free. You do not need any expensive software to get going. Let's walk through how to get to your blank canvas. All right, this is super simple, just 4 steps on the screen. We're using Yahoo Finance because it's powerful, it's easy to get to, and hey, it's free. For our example, we'll just use Apple's ticker, that's AAPL. So go ahead, find that chart tab, and definitely hit that full screen button. You're gonna want a nice big workspace for this. Okay, so you should be looking at a blank chart right now. Let's make it useful. Before we add any of the fancy indicators, we've got to set up the basics so you can clearly see and understand what the price is doing. First things first, switch the chart type from line to candles. See, a line chart just connects the closing prices, but candlesticks, they give you the whole story. The open, the high, the low, and the close for each period. It's way more info. Next, find your time intervals. For this foundational setup, we're choosing the one-day chart. That's going to give us a solid medium-term view of how the stock is behaving. Now that our chart looks right, it's time to add our first layers of intelligence. Think of these as the indicators that are going to help us translate what the price is actually trying to tell us. We're going to start with a big one, the 200-day EMA, or exponential moving average. Seriously, think of this line as the long-term backbone of the stock's trend. It is a critical first piece of our puzzle. So what does it do? Well, the 200-day EMA basically smooths out almost a full year of price data to give you this really clean baseline. Its main job is to act as a major support level. When a stock's price falls down to this line, you better believe big money traders are watching very closely to see if it's going to bounce. You can think of it as your guide to the stock's long-term health. All right, next up, we're adding 2 shorter-term moving averages. These are going to track the more immediate price action. Just follow the steps on the screen, add 1 moving average, set it to 13, and make sure it's exponential. Then just do it again, but this time for a 48-period average. And pro tip, give it a different color so you can instantly tell them apart. Now, we just added the 13 and the 48 EMAs, but it's really important for you to know you've got options. Another super popular and effective combo is the 20 and the 50 EMA. You know, there's no single right answer here. Both of these sets are used by tons of traders, so feel free to play around and see which one you like the look of. Okay, we've got our trend lines all set up. Now let's add an indicator that helps us figure out the momentum behind those price moves. For this, we are going to use the Stochastic Momentum Index, or SMI. So this indicator pops up in its own little window right below your price chart. And the best part is it's pre-configured in Yahoo Finance, so you just have to click Add. Its job is to give you another perspective. Think of it like a weather forecast for momentum. Is buying pressure getting strong? Is selling pressure taking over? Or is this whole trend about to change direction? You know, with just that basic setup, you already have a really powerful chart. But as you grow as a trader, you're going to want to add more tools to your arsenal. So let's quickly look at 3 other popular indicators you should definitely get familiar with. First up is VWAP. That stands for Volume Weighted Average Price. This one is a huge favorite among day traders, but honestly, it's useful for everyone to understand what it's doing. What makes VWAP so special is that it doesn't just average the price, it also factors in the trading volume. This gives you a much truer sense of a stock's, real average price for that day. A lot of big institutions use it as a benchmark to see if they got a good deal on a huge order. Okay, next is a classic momentum indicator, the MACD. Now, the name, Moving Average Convergence Divergence, sounds super complicated, but I promise the concept behind it is actually pretty simple. At its heart, all the MACD does is show you the relationship between two different moving averages. It helps you spot shifts in the strength and the direction of a trend. Basically, when its two lines cross over each other, that can be a signal that momentum is shifting, either from good to bad or from bad to good. And finally, we've got one of the most popular indicators on the planet, the RSI, or Relative Strength Index. If you've ever looked at a stock and wondered, has this thing moved too far or too fast? Well, this is the tool for you. So the RSI is an oscillator, which is just a fancy word for a gauge that moves back and forth, in this case, between 0 and 100. It measures the speed and the size of price changes, and its main job is really simple: to help you spot when a stock might be overbought or oversold. And here's the easy way to read it. When that RSI line goes up above 70, the stock is considered overbought. That means it's running hot and might be due to cool down a bit. On the flip side, when it drops below 30, it's seen as oversold, which could be a signal that buyers are about to step in and push the price back up. And there you have it. You now have a complete foundational chart setup, plus a few extra tools for your journey ahead. You have officially transformed a blank, confusing screen into a strategic roadmap. So the only question left is, now that you have the tools to listen to the market, what's it going to tell you first?